The Dow Jones Industrial Average is a market index that frequently is mentioned first when people talk about stock market performance. It's been around for a long time, and yet it's not very readily understood. In fact, many commentators take the position that with its idiosyncrasies, the Dow Jones is not a meaningful market index in comparison to broader indexes like the S&P 500 and the NASDAQ Composite. So, in this research brief, we'll treat the Dow Jones Industrial Average as a portfolio of 30 stocks. We'll look into its calculation, its construction, and yes, some of its quirks. Finally, we'll single out several Dow Jones stocks that currently have a high value trend rating and might merit further investment attention. The Dow was first published in May of 1896, and it was only 12 companies, representing the largest companies in each sector of the stock market. It was initially calculated as a simple average of the 12 companies. The number of companies was expanded in 1929, interesting timing, to the current number of 30. There have been numerous changes in membership over the years, and with those changes in membership, stock splits, corporate actions of various kinds, all of those have required adjustments in how the Dow is calculated to maintain consistency from one period to the next. Over the last 40 years, the Dow Jones Industrial Average has climbed 3,200%, roughly 32 times. The increase reflects two things. One, the dynamic growth of the U.S. economy, and certainly two, the dynamism and underlying fundamentals of the companies that comprise the index over time. The current makeup of the Dow is shown here, 30 stocks. The newest member is Walgreens, the drugstore operator, which was added to the index a couple of months ago to replace General Electric, which was one of the earliest members of the Dow Jones. And interestingly, over time, membership in the Dow Jones really does reflect dynamic areas of the economy, and lots of the older, slower growing companies have been taken out and replaced. One of the questions that you have to confront is the Dow Jones a really odd duck? There are some very unusual aspects to its construction and membership, and a lot of people say that it really is not very relevant relative to indexes that are market cap weighted like the S&P 500. To get a little bit deeper into the calculation, this is the 30 stocks with their share prices reflected. The Dow Jones starts out by adding up all of those prices. So the assumption is here that the portfolio would have one share of every company. And you can see to do that right now would require about $3,500. Interestingly, when you do that, the percentage weight of a given company in the index reflects its share price. You'll notice 3M company is about 5.7% of the Dow, going all the way down to the bottom with Walt Disney at 3.2. The sum of those prices, you end up, as we said, with about $3,500. And then the divisor, which Dow Jones maintains, which used to be 30, is now 0.14. And when you divide 3,500 by 0.14, you get the roughly the current level of the index at about 25,000. If you look at the impact of companies then on this index, I'm not sure many people would have appreciated that the highest weighted company in the Dow Jones Industrial Average is Boeing. And in fact, it represents 10% of the index, even though any one holding with 30 stocks would be 3%. It's much higher weighted than the average stock. And you'll notice down at the bottom, Pfizer, for instance, at 1.1 is very much underweighted. Let's look at the divisor for a second. The divisor, as I said early in the game, was used to divide the sum of the 30 stock prices to come up with the index. But over time, based on stock splits, corporate actions, changes in membership, that divisor has had to be changed regularly in order to maintain consistency in the index from one period to the next. And interestingly now, a $1 change in any of the component stocks would account for about a $6.50 change in the index itself, with that divisor at 0.14. In terms of a portfolio, it's interesting to look, and you'll notice here these are characteristics of the Dow Jones looked upon as a portfolio of 30 stocks. And these stars are a representation of how important a particular factor is in understanding the makeup. We can look at some general conclusions here. The Dow Jones is a large cap growth and income oriented portfolio. It's very conservatively managed. It has broad industry diversification. The companies are high market capitalization, very high financial strength, quality, low variability of earnings, very high demonstrated profitability, demonstrated meaning reported profitability as opposed to forecasted. And the stocks have generally lower stock price volatility on the low end of publicly traded companies. If we look at some summary statistics, it's interesting to compare the Dow to the S&P 500, which is frequently mentioned alongside the Dow as an important market index. So for instance here, if we look at profitability, you'll notice that the most recent 5-year return on equity for the Dow Jones Components is significantly higher than the same calculation for the S&P 500. In terms of growth, you'll notice that in the last 5 years, the Dow has had significantly lower revenue and earnings growth than the S&P. And along with that, for 2018, analysts are looking for a very significant improvement in earnings growth, doubling the rate of the S&P 500. Notice also with dividends that over the last 5 years, the Dow Jones companies have had a substantially lower rate of dividend growth than the S&P 500. Investment quality, one of the components of that would be company size. You'll notice the average Dow Jones stock has a market cap of $225 billion, whereas for the S&P, the average is about $38 billion. So the companies are significantly larger in the Dow than they are in the S&P 500. In terms of valuation, it's interesting that on a forward-looking basis, looking at PE ratios and current prices, the Dow sells at a substantial discount of 3 or 4 multiples relative to the S&P 500. We have two ways of looking at industry weights. One is big, broad market sectors. The other is more specific industry diversification. For instance, if we look here at the sector diversification, you'll see the Dow is much more heavily weighted in cyclicals. Distribution would be retailing and all other sorts of distribution, and it's underweighted in stable growth and in technology. This is again relative to the S&P. And if we look at those specific sectors, it's because of the Boeing weight, for instance, it's very heavily weighted in aerospace and defense, financial services with the banks, and it's underweighted in conglomerates and also software and services. So it is a much less techy, much more cyclical collection of stocks than the S&P 500. So, with all of the quirks and idiosyncrasies of the Dow Jones and the way it's calculated, the question has to be, is the Dow Jones Average really relevant to today's investors? And probably the best way to look at that is to look at how the S&P and the Dow have performed over time. The Dow really is kind of an odd duck in the way it's calculated, and some of the weights, industry weights, company weights that exist. So this is again the Dow Jones Average over the period 1978 to 2018, and here overlaid is the S&P 500 in red. And what's interesting here, kind of surprising given the differences, is that you could basically throw a hat over the two of them. The performance, yes, there are occasional periods where one of them will perform differently than the other for a while, but as you look at that long sweep of history, the two indexes have generated pretty much the same result, even though they are, as you've seen, greatly different in the way they're calculated. 40-year performance virtually identical. So let's look at a couple of the Dow components here. PriceTarget Research provides ratings of relative attraction on a weekly basis on 6,000 or 7,000 stocks, it's interesting to see who the real leaders, the stars in the S&P, in the Dow Jones Average are right now. The first one is Apple. Apple, as you can see at the bottom, the green dot at the bottom shows Apple's current value trend rating. It's been either B or A rated basically back into 2016 and currently has our highest ratings. So it is in fact a leader. A second stock in the Dow, another tech stock, interestingly, with a current A rating is Cisco Systems. You'll see that it's had a buy rating for the last several months. It had a buy categorization back in 2016, but then that rating fell to neutral, or C rating, and now it's back. You'll see it has a price target of $53 on it. So it is another PriceTarget Research leader. And finally, a third star of the Dow, if you will, is Intel Corporation. It has had a B or an A rating back into the middle of 2017, currently A rated. Price target is $71. Very attractively priced at this moment. So it too is a market leader. So that's a look at the Dow Jones Industrial Average Portfolio, some of the quirks of the way it's calculated, some of the industry diversification, item weights, and the fact that with all of those differences from the S&P, it provides about the same kind of reading as to the overall market as the S&P does. And we hope to have identified several good, about 3 out of the 30 companies we've talked about here are A-rated and pretty attractive for current purchase. Well, that's it for this research brief. Until next time, you can follow us on the web at PriceTargetResearch.com, where you'll enjoy very broad coverage, comprehensive research and ratings, and relentless updates and alerts. You can also find additional videos on YouTube at youtube.com/PriceTargetResearch. And you can also follow us on Twitter at twitter.com/PRCTarget. That's it till the next research brief.